There are many benefits to holding risk cover within an SMSF, but still the take-up seems to be very low. Joining me today is Super Guardian Chief Executive Olivia Long to discuss this situation. Welcome, Olivia.
Thank you, Darren.
So listen, just how poor is the uptake of risk cover in SMSFs?
Very interestingly, the current stat's still at about 13%, which has sat relatively still for the past couple of years despite the growth that we've seen in the sector. So overall, I'd say it's pretty low.
So are there any particular reasons for this?
A few reasons that come to mind. The first would be that a large number of SMSFs are established by accountants as a tax vehicle essentially, and a number of accountants just aren't licensed to consider or provide advice on insurance. Therefore, I think in the establishment process, the insurance piece tends to be missed to a certain degree. I also think a lot of people find the concept of rolling over a benefit from an existing fund to their SMSF difficult or confusing enough, let alone to stop and consider what insurance is currently held with their existing provider and what insurance they can possibly hold in their fund. So I think I see a large number of people who leave a balance in their previous fund just to maintain insurance, thinking that they might deal with it later rather than at the time of setup. I also think there's a number of people who establish SMSFs, true DIY investors who do it off their own bat, and when they're setting up their self-managed fund, they're thinking about their strategy and what they're going to do to make money in their fund, not necessarily considering insurance, because it is quite a complex area. And when you look at the number of insurance providers out there, it can be quite daunting for all of us.
Now, speaking of SMSF trustees and what they have to do as far as compliance issues go, obviously the rules changed where in the investment strategy they have to take into account insurance considerations for the members of the fund. Has that made any difference, or will it make any difference? Is it too early to tell whether or not it will make a difference? It's
quite interesting, Darren, because we incorporated that into our strategy about 12 months before it became law. So for a couple of years now, we've had a distinct component where people need to sit down and look at it and consider it, yet we're still not seeing the take-up change. So I think when trustees are looking at investment strategy to start with, if they're not seeking advice or they're not dealing with an advisor who's stepping them through that, they're finding the strategy component itself complex enough without considering the insurance attached to it in terms of, what's my asset allocation, what's my rate of return. So by the time they get to insurance, although it's there, once again, I think it's one of those things they might look at later.
Does this come down to an educational thing?
Absolutely, I think it's around education. And if you look at the people or the key players in the marketplace around SMSF, you have advisors that constitute advice for a small portion of SMSFs. You've got accountants where insurance is something they don't know anything about. And then you've got nothing. So there's a huge gap there for the actual self-directed investor or for mums and dads to try and find out what insurance should I be holding. And for that reason, I think they're happy to sit back and maintain a balance in their corporate or retail funds because it's there.
Now, accountants are going through a different issue with licensing, which potentially will allow them to give a broader range of advice. Do you think that may help because they may start to have conversations then about insurance coverage?
I think they may. I think we're still several years off seeing that level of education and the insurance become a natural part of discussing setting up a self-managed fund.
Now, do generations and demographics make any difference? With statistics, we read that there's a younger set of SMSF trustees establishing funds and coming through. Do you think that will make a difference potentially? I
think potentially yes, because the younger generation is so far off retirement, let alone death, that thinking about some form of life insurance or what happens when I die is not even part of where they're at in their life cycle. So I think it will have an impact on it, yes.
So when people are considering whether or not to take out insurance within their SMSFs, what are the things that they should consider that would possibly be a benefit of doing it?
Okay, in all honesty, the real benefit is that the fund pays the premiums. And for people who are cash flow tight outside of super, you look at your 40 to 60-year-old people, most of them are still putting kids through school, money is tight, life insurance is seen as a bit of a luxury that they may not have the cash flow to do. So if you can do it with inside your super because of that, and make it possible as a result of having a super fund, then that's a win.
And are there any downsides that they should consider as well?
There are downsides, and again, this comes down to education, and a lot of people, unless dealing with advisors, may not necessarily know this. But the fact is, if you pay for your insurance premiums in your super fund and you claim a deduction for them, then there's going to be tax payable on that death benefit when you eventually pay it out to your beneficiary. So, for example, the fact that you're claiming the premium creates an untaxed element, and you can see, say, $1 million benefit be taxed anywhere up to about 31% at the time it's actually passed on to the beneficiary. At a minimum, any insurance premium that's been held within an SMSF, even if you haven't been claiming the deduction, is going to be paid out at about 15% plus Medicare levy, so 16.5%. That's the downside to holding it in super. If you hold it personally and outside of super, then there's actually no tax payable on that premium when you pay it out to your beneficiary. So that could be one reason that we're seeing it not held within super. Probably does make it less attractive, to be honest. But for those that can either hold it in super or not have it at all, I think it's still a win to do so.
Okay, thanks very much for your time today.
My
Olivia.
pleasure.